Hello guys, it's your boy Crypto Cape, and I'm here today again to bring you a beginner's lesson which I title Candlestick Analysis. Beginner's Candlestick Analysis. So, what do we mean by candlesticks in the first instance? I call candlesticks, as we all call it in trading, the visual representations of market data. Whatever has transpired on the market, on an instrument or an asset that you are trading as in the fact that you are buying and selling an asset or a commodity. So the visual representation of whatever transpired between you, the buyer, and the seller is what we refer to as candlesticks. So like we have on this screen, these are candlesticks. These are a bunch of candlesticks. We have the green, we have the red. You can customize to whatever color you want, but the default settings or the default colors are mostly green and red. And the green represents when there is an increase, a positive change in the value of the asset, and the red color represents when there's a negative change in the value of the asset. So how do we analyze or read candlesticks? Because for you to be a successful trader, you have to understand how to read candlesticks, and this is the first thing you have to know when you want to start trading as a beginner. So I will give some examples, some very low, very simple example to understand, so you can understand how to read these candlesticks and know what is going on. When you see a bunch of green candles like this and some bunch of red candles like this and then green candles again, you have to understand what is going on. Or when you see a single green candle like this, then the next is a red candle, you have to understand what is going on. That will be your beginning step to be a successful or profitable trader if you want to trade with technical analysis. So to start, let me draw a small representation of a candle. I'm just representing this as a candle, a green candle. So we have a candle with an open, a candle characteristics of a candle, it has an open price, they have close price, they have lows, and they have highs. I will explain what this means shortly. Okay. All right, so a simple green candle is like this, just like we see in this very candle. We see the green body, the thick part, the colored part is a body, while the line part, either up or down, is what we call the wicks. Some people call it shadow of the candle. So what basically happens, let me label this quick. This will be the low. For a green candle is different for a red candle. This will be the high. This will be the close. And this will be the open. Let me quickly draw a down candle as well. So I can just represent them together. So a red candle. My color is not exactly red, but I just have to take it as it is. So we also have the shadow, either upper or lower part of the candlesticks. Then we have the low, okay. These are just pointers to these levels. They are not part of the candlestick, they are just pointers to the levels I'm trying to inform you about. So this will be the low. This will be the low as it is here. This will be the close. This will be the high. And this will be the open price. Okay, so what does this candle represent? This is an up candle growing as in a positive candle, while this is a red candle as a negative candle. So what do they represent? Let's assume that we want to buy an iPhone in the Nigerian context. We want to buy an iPhone or a Samsung phone or any phone at all. Where do we go to? We go to the computer village. And once we get to the computer village, we want to look at some shops where we can actually get a phone that we need for a bargain price. You might see a very tall building, big building, and you might just say, oh, no. This place, the rentage, the amount they pay on rent each month on that building will be very expensive. So in case their products will be very expensive, you wouldn't buy there. But you look for Namdi, a Namdi shop that is not so big, it's not so small, and you think he's still looking for clients, looking for customers, so he will be able to reduce price for you, give you a good price, so you can easily buy at a lower cost than you will buy at the bigger shop. Just like mall, for example, the prices of phones at the mall, they are usually expensive than the prices you will get the same item for at computer village or Seco in Ghana or any other markets where we have the local market for the computer accessories and phones. They are cheaper than the amount you get them at the malls. So now when you get to a shop that you wish to buy from and you see Namdi or Charlie or anybody that sells phone, and then you price, you ask, oh boy, how much is the price of this phone? Then it tells you the price is 1,000, or let's say the price is 10,000. He has given you what? He has given you the base price, which I will call the open price. So this now is the amount, is what he has given to you. He has given you the open price. So let's represent this. He said 10,000, right? So 10,000. That is the amount he has told you, which will be the open price. That is the first price the assets you want to buy is going for, or the phone you want to buy is going for. He said, okay, I will sell the phone for you 10,000. Then you as a person, you can read, oh no. That price is too much for me. I can't pay 10,000 for this phone. Okay, blah blah. Let me give you 7,000. What have you done? You have dropped the price of the asset that he is selling. You have dropped it from the 10,000 he initially told you. You dropped it down to 7,000, which means you have taken the price of the asset, you have taken it lower to 7,000. That is a low of the price. That is a low price of the item as per your negotiation with Nnamdi. And then this, once the price of the asset is below the open price, it usually becomes a red candle. It's no longer green because it's not a positive change from the open price. It is a negative change. Then you wouldn't have seen this week. You wouldn't see this week because you do not have it yet. Here is the open. Now you have taken the price of the asset lower to 7,000. Then what you see on the representation on the chart is a red candle. At that particular moment, it can change. So when you drop the price of 7,000, Nnamdi can say no. 7,000 is not the market price for this phone, and he is giving you a bargain price. And that if you go to the mall or any other place that they sell the same kind of phone, that you can get the same phone for maybe 20,000 even, maybe 20,000, yes, or 15,000. So what has Nnamdi done? He has basic, okay, the moment you drop the price from the open to the low, and then the price rises from that very low, from the lowest point, the lowest price it has reached, it rises either back to the open or above the open price. It leaves a trail behind it. That is a wick. For you to know that at a certain point in time, for the value of this asset, it was priced at 7,000. So it leaves a trail behind it. That trail is what we call the wick or the shadow. So when Nnamdi disagrees and rejects your 7,000 price you are offering, the way you rejected the 7,000 and offered him, you rejected his 10,000 and offered him 7,000, he is also rejecting your 7,000 and telling you, if you go to another shop, this same item is being sold for either 15,000 or 20,000. Let's assume this is 20,000. So what he has done is he is giving you a higher price for the same item. He is not telling you this item is being sold at 20,000 at a shop elsewhere. Now, he is telling you, if you do not buy at this 10,000 bargain price he is giving you, you can go elsewhere and you wouldn't get it for less than 20,000. You are looking for a place you can get this phone as a bargain price, at a cheap price. And the moment is also that what you see again on the representation on the chart is a green candle. When it's above the initial open price is given to you, if that by 1 or by 2 or by 0.07, it turns to a green candle. Then the body becomes solid like this. This week wouldn't appear at this moment until it goes back down. So you're saying 20,000. If you have the 20,000, you wouldn't come to the shop in the initial place in the first place. He would then say, okay, he's just telling you the market price at some other places. So he's taking the price very high there. Either you then will renegotiate with him and say, okay, how much should I give you last? The moment you drop that back the price, either to the 10,000 if initially quoted for you, you see, what do you see here? You see a trail. You see a trail telling you that at a point in time, the value of this phone or this asset got to 20,000. But you didn't close at that point. You didn't agree, you rejected it. So the price came back down to either 10,000 or whatever price it is trading at the moment. As in, the price is trading at the moment is the price you are negotiating with him at the moment. But regarding phones, if it gives you 10,000 offer and you reject it, it may not be able to increase the price of the item again. It can only quote you for you to see that at a point in time the price is higher or is higher at another shop. So using this example of a phone, you might then say, okay, last price, I'll give you 9,000. Assuming this is 9,000. You see the changes being made. The body of the candle then becomes red again. Since you have dropped the price from 10,000 is initial price, and from 20,000 where I told you at another shop you get it for 20,000, you have dropped it to 9,000. If he agrees to sell this phone for you at this exact price, at this 9,000, that will be your closing price. If he agrees, that will be their close, and then it will close the trade will close as a red candle. This will be the open. This will then be the open price, the 10,000. You took it to 7,000. He brought it to 20,000 as an example he gave you. Then you both agreed to sell or you to buy at 9,000. So that will be your closing price, just like here. I will come back to this. Okay. So This would be the good example. He gave you 10,000 here. He gave you 10,000. You refused. You took it. You price it at 7,000, which is a low price. You price his market, and he said no. At some other places, it goes for 20,000. Because this is close to this, let me just say 12,000. He says it goes for 12,000. Then you decide no, you can't buy it at that amount. Then you offer him an amount lower. He agrees. Probably you offer him 9,000, and he agrees to it, to the 9,000. So that will be your closing price. That will be your closing price. I'm talking about this red representation now. Oh no. Oh, why? So I'm talking about this red representation now. But for some markets that the price will increase, like the price will increase, this will then be the open price. Maybe you price something at the market for an amount. I mean, the person gave you an amount as the open price, you do not agree. You price it lower, they do not agree. They quoted you an higher price, you do not agree. But then price do increases instantly, like we have in the crypto and forex market. Then you agree to buy at a point higher. Or there is a willing bidder, somebody who wants to buy the same phone. Maybe the moment you are pricing the phone at 7,000, the person was there, he gave you 10,000 open price, he told you you get it higher somewhere else, 20,000 or 12,000, you do not agree, and somebody is willing, then the person just outbids you and say, oh guy, let me give you 11,000. You know, the person has added 1,000 more to his open price from the first price he quoted you that I will sell it to you 10,000. If somebody comes and gives him 11,000, he won't sell it to you again, because for you to price him 7,000 and co, he will know that, oh, you are not ready to pay that 10,000 is giving you. And if you see a better offer of 11,000, he will see it. So for that trade, we will see a green candle. This will also still be the low. The 7,000 you priced it. The 10,000 will be the open price that he first quoted you. Let's take this as 12,000 now. The 12,000 will be the highest price he quoted you. I don't know why this thing is okay. Then the person offering him 11,000. Don't look at the distance of this candle, it's just a representation. The sample I'm giving. The person who offers him now 11,000 as the price he will pay for it. So the initial price, the open price was 10,000, and he is gaining 1,000 more. So the change between the amount sold for, which is the close price, the amount the item finally sells for is the close price. The amount the item begins trading, the initial amount he is telling you he will sell it for, is the open price. Whatever lower price you have priced the item is the low price, and whatever higher price he has quoted you that you can get this item so amount for at so place, that will be the higher price. And they leave the shadow if you do not settle, or if you do not buy it at a higher price. Assuming he is telling somebody you can, or he's telling you this item you can get it at 12,000 at another shop, and somebody just walks in and say, let me give you that 12,000. You have priced it 7,000, so you will see the lower wick, you will see the bold green candle, and if it says at this high, the highest high it got to on the day, that will also be the close price. This wouldn't be anything again, because the price never closed there. This won't exist again. So assuming the person just works and he gave you 10,000, you price 7,000, he doesn't agree to the 12,000 is where how much you can get it elsewhere. Somebody walks in and just gives him the 12,000 cash, and he sells it at that 12,000. That becomes the high and the close. So what we see on this representation, this bunch of green candles, it means at this point, let me describe with this big candle. Can you see a very small wick? That means at this point, that is the open price. You should be able to see a very small wick below it. You should be able to see it now. That's very small wick. That means when the price opened at this point, the market went lower. Somebody either sold it lower than the open price. At this point, when the candle was trading at this very little point, you will see a red candle. You will see a red candle. And the moment it comes back up, you see it becomes bold. Also, look at this. Look at this side. Look at this side. That point there. This means during this hour or during this minute, because one candle like this can represent a day, it can represent an hour, it can represent a minute, it can represent 15 minutes. That means all the transactions, all the ups and downs, the item price has gone within that particular time. So it, as we have on this example now, we have 30 minutes. So this candle is the representation of every item price or every data that was collected over the time of 30 minutes. So what happened there was that the item, assuming this is a phone we buy, at a point it was priced at this high price. At a point it was priced at this very low, but this was the initial open price, and this becomes the price which it finally settled for. This closing price, this is the closing price. So this is a price at which it finally sells for, at which it was closed. The contract, the trade was closer. I agree, I pay you this amount, you give me the product, assuming it's a physical product. So that is what is going on when we talk about candlesticks. And the other one, the red candle, as we see here, this becomes the open price. It is red because the final price, which is the close price, is lower than the open price. Maybe here it quoted 10,000. It told you somewhere else it's being sold for 11,000 or 12,000, which is why you see this upper wick. But then you price it down that, oh, no. Before, if you it was to be 10,000, I will give you. But now this market is selling for 5,000. That means you have brought the price to a low. But then it says it cannot sell it 5,000. Then maybe you later agree 7,000. Then it comes back up. You agree. But the final price, which is the closing price at which you get the item, is lower than the initially quoted price, which is the open price. Hence, you see a red candle. So what has happened over time here is that you see a bunch of green candles. It simply means here, people, in this case now, not just you, people are willing to buy this asset, and then they are even willing to pay higher for it. So the price keeps rising. It keeps rising. On the time of 30 minutes here, the price rose. It was sold for an expensive amount. On the other 30 minutes time frame, on the other 30 minutes, the next 30 minutes, people are even willing to even buy it for an even higher amount than it was sold for initially. So you keep seeing it rising. You keep seeing the price rise. The price keep rising. This is 30 minutes, another 30 minutes, another 30 minutes, like that, it keeps rising. So what happened here? It was like people thought, oh, this item has become so expensive and they are not willing to buy it for this expensive amount. So, and when the seller realized people are no longer buying for this amount at this point, he will start reducing the price and see if people will buy. So when the reduction of the price got to this point, people became willing again to buy, and they started buying. Even the first expensive price people said was so expensive for them to buy, where it got a top there, and it's the price, there was more supply than demand, because there is items nobody is buying. You start seeing shops giving you discounts, 10% discounts, 30% discounts. Some will even give you 70% discounts, which it means they are trying to make people buy. Then some people will start buying why they reduce the price. But once there is demand again, what you will see is price will start increasing again. They will start increasing their price. So that is why you see price came back to this low. Then at this point, when people started buying again, started increasing. Same thing here. People stopped buying. There was more supply than demand. Then price, they started giving discounts. price started falling. And when people thought, oh, price is here, I think it's buying here is better than buying here. Then people started buying in large volumes again, and we see the price increasing. The very good example of these things is this recent coronavirus that we also. When before coronavirus, we also what happened? At times, a positivity can mean negativity, and negativity can mean positivity. What I mean is this: up can be down, down can be up. And let me explain this now. When we had the coronavirus issue, what happened was that the market was trading at a particular price, and the bad news affected the economy of every country, and we saw stock markets, nearly every market crashed because of the negative impact of the coronavirus. And we saw, as we see the market crashing, the markets were crashing. People were selling because they wanted cash. And what are they using those cash for? They are using the cash to buy hand sanitizers and nose masks, which means there is supply. People who have Bitcoin, they started selling their Bitcoin. Bitcoin crashed from around 7,000 to 3,007. So people were selling assets they have in order to process cash, because cash will become very useful when the economy is on lockdown. As we see, the economy was on lockdown, and everybody started rushing to get one or two things they could get. So when the market crashed, people were selling things for cash. What did we see? We saw an increase in the price of hand sanitizers and nose masks. What was selling for $3 or maybe $1, or maybe, yeah, let me just say what was selling for $1 started selling for maybe $10. You saw a sharp increase because the demand for nose masks and hand sanitizer become very much, very huge, that the pharmacists and the sellers, they saw an opportunity and they started increasing the price. If you are not willing to buy at that increased price, another person would buy. So they benefited from the virus attack, whereas it affected every other person. The market crashed, but the market for nose masks and hand sanitizers and foodstuff skyrocketed. It boomed. Then when coronavirus started dying off, now we have stories of vaccine here and there. What happens? We start seeing hand sanitizers and nose mask prices starts falling again. It starts falling. So if we are to see another wave of coronavirus, whereas it becomes even more serious, maybe it has mutated and becomes very serious than the first wave, what do you think will happen again to nose masks and hand sanitizers and foodstuff? Their price will then come up from whatever lower price it has made, even to an higher price. That is what I mean by positive can be negative and negative can be positive. What is negative on your side can be positive or play to the benefit of another. And what is playing to your benefit can play to the negative of another. Like the coronavirus, it affected everybody. People couldn't go to work. People couldn't even make money. People who live on daily means, they couldn't even make money to pay for one or two things. But then we have the pharmacists who are selling all the nose masks and making millions. Some has even bought container loads of sanitizers and stuff to sell at expensive price, only for them not to be holding on to bags of failures, because as we start having news of vaccines, the price started dropping to whatever level it will drop to. But if we see another wave, it will then increase again. The price may even go as much more as it's even got to before. It is the same thing with trading. And this is what we need to know to be able to understand what is going on with the market. And this is what we also need to know to be able to know when to buy and when to sell. Because, for example, when this item when it was selling and it got to this point, when the market was selling and it got to this point, because it has been coming up for a long while, some people will be buying at this point. They will be buying, but then they are buying at a place no other person was willing to buy. So when the market started crashing started coming down, when people started, the sellers started giving discounts, they started reducing the price. Some people you buy it and keep, whereas you that have bought at the top, you are holding on to a bag of loss. You'll be underwater. So you have to understand when you think people are ready to buy, like when the price got back here, back to this low, or let me just say this low, it was like people started buying again. When it got back here, people started buying again. So you have to understand when to buy, so you do not buy the high where people are willing to start giving discounts. It's like you go to the mall now, you want to buy a pair of jeans, and maybe a pair of jeans is going for $50 normally, but you do not know that the sellers are experiencing difficulty in selling those pair of jeans. So they are planning to give the jeans a 50% discount to start selling it for $25. But you now go there today and you bought it for $50, only to realize that just an hour after you have bought it for $50, or a day after, they are running out the same jeans you bought for $50. They are now selling it for $25. Will you be happy? You won't be happy. You'll be holding on to a jeans that do not worth as much as the $50 you pay for it anymore. If you want to sell the jeans to another person who knows that shop, he wouldn't buy it from you for 50. He will not even buy it for 25 because he can get it for 25 on discount at that shop. So you now are holding on to a devalued pair of jeans. So that is why you have to know when to buy, so you do not buy when people are willing to give discount, or when the market is willing to give discount, and you do not sell when people are willing to buy for the price to increase. So in our next lesson, we'll be able to discuss in detail into how you can buy and sell, or whatever you can use to know when to buy and when to sell. But this is just a basic analysis or basic introduction to how you can know what this graphical colors, whatever I can call it, what it means. So you know, when you see a candle like this bottom is a open, this is a close, this is a high, either for the day or for the hour or for the time period, even it can be a 5-minute time period. And this was the low it made. And for the red candle, you can know that, okay, it opened here, it closed there, the thick body, the thick part, and the line part, which is the wicks or the shadow, the highest point was the highest amount that item sold for or was bought at, and the lowest point was the lowest amount it was sold for or bought at by somebody. So thank you for listening. If there is any other question about these candlesticks, this is just a very basic and very low level of introduction I can give before we get into some advanced or some intermediate candlestick analysis and price action. So if there is any question or what you do not understand, do not hesitate to let me know so we can talk about it. Thank you for listening, guys. See you next time.